Hi, welcome to Cherry Bekaert's GovCon podcast, where we discuss current government contracting trends, compliance matters, and best practices to guide federal contractors forward. I'm Susan Moser, a partner with Cherry Bekaert, and with me today are other members of our Government Contract Services Group. Joining me is John Ure. He is a tax partner who specializes in working with small business contractors, and Brendan Halloran, a senior manager who works with contractors of all sizes on compliance, regulatory, business systems requirements, and who prior to joining Cherry Bekaert was a divisional ACO with DCMA. This is a podcast, another podcast in our 8A government contract series. Today, we're going to take a look at contract performance after the 8A program. While this topic will delve into important considerations for small businesses who will be graduating from the SBA 8A program, a lot of the information that we're going to discuss today is really relevant to any small business that's doing business with the federal government. Our government contracts group, we work with hundreds of clients, both small and large, and try to take something that we learn from every client that has some benefit to a wider audience. So thanks for joining me today, Brendan and John.
Great to be here. Thanks.
So let's start out. The topic is contract performance after the 8A program. So let me just start out by asking you both. So a company is getting ready to graduate from the 8A program. And again, really, we want to encourage folks to be planning this well in advance. This is not something you start thinking about in the last year of the program. It's a 9-year program. But there's several paths that companies can take as they are exiting the 8A program. The two most common are staying small or being fully prepared to compete for full and open. So John, let's start out with you. You work with so many 8A companies. So let's just start by talking about why a contractor might want to focus on staying small. What does that mean? Is that a bad thing? And what should they consider doing differently?
Yeah, great question. I think some feel that if they are not growing and not expanding and becoming bigger and bigger all the time, that maybe they're not as successful or not doing as well as they could, and that's definitely not the case. We have several clients, and in fact, there's many companies in the industry that choose to stay small for various reasons, and so no, that's not a bad thing. That can be a very deliberate choice, and it can be a very profitable choice at the same time, where companies choose to specialize, to go into a niche area, and really perform very well in that area. So if that's your game plan and something you're considering, a few things to think about as you're going in. One of those is to focus on the quality of the opportunities. With small businesses especially, sometimes a lot of them feel like anything that walks through the door, any opportunity out there, is something they should grab a hold of and really pursue. And maybe initially that's your game plan to kind of get the wheels rolling. But if you choose to stay small, if that's a deliberate decision you're making, then the opportunities that you're choosing need to narrow down to really the quality opportunities, the ones that will grow your core competencies, the ones that will be continue to be very profitable for you. And what we've seen is when companies choose to do that, they're able to, they become more profitable. They're able to hire experts in their field, and they become a very powerful, smaller company that can deliver great results, and they develop a great reputation inside that industry, and they continue to do very well. So it's kind of a self-fulfilling prophecy. As they focus on that, they become better and better at that, and still remain under that size standard. So, and just to clarify, just because you're out of a program, if you choose to stay small, that means you're still qualifying as a small business under the NAICS codes that you have under the size standards. So while some of the benefits of graduating from the 8A program, as far as your wealth accumulation rules, some of the ownership rules, those are more relaxed. There still are some standards you need to remain under in order to qualify as a small business for SBA considerations. You know, a lot of our clients, you know, sometimes they choose, in order to stay small, they want to shed a contract or various contracts, or shed a division that they've started to grow. And this spin-off or getting rid of these contracts, it's a great opportunity for them to remain small. A few considerations in that realm is, when you're calculating size standards, just because you spun off a business, say in 2022, that income is still going to be on your tax return for 2022 until you actually spin off that division. That's important because the NAICS codes, of course, many of them are based on revenue. So if just because you spun that off doesn't mean you don't have to include that revenue for 2022. You do up until the date that you sell it, and that goes on your tax return, which then helps you remain as a small business under your NAICS code. So most NAICS codes many NAICS codes are revenue based, which is your gross income on your tax return. Some are employee based. So obviously you want to understand what your contract, what's happening in your contract, and also what your NAICS codes call for, and still try to remain small if that's a decision you're making. But we've seen a lot of companies do this very, very well, and have a lot of respect for those companies. I think they, if they can do it well, it's something that can be very profitable for them. They maintain a lot of times the culture that they build in a smaller company. I think it's harder to, once you have a great culture in a business, to continue to have that permeate your company as you continue to grow. And a lot of our government contractors grow very quickly and quite big. And so that's another advantage that they might enjoy. But it's a great choice. And if you can do it right, that doesn't mean you have to give up profitability or give up expertise. You can still have both of those in a small business.
Great. Thanks, John. And so, just to chime in, we do see that as a strategy for a lot of companies is, competing in full and open. You still might consider yourself a small business, but at $40 million, if you're no longer small and you have to compete with full and open, that's a bit of a shark tank out there. And so Brendan, talk a little bit about some of the considerations if you do plan to focus on growth as a large business. What do you need to do differently? Again, hopefully you're not waiting until graduation to think about this, but just talk about some of the considerations.
Sure. No, thanks, Susan. I mean, that definitely brings, a whole new set of, requirements and considerations that companies need to take and focus on government contracting. John, as you said, there's, certainly the need to, when you're small, you're probably, competing for and working on a number of different types of contracts. And so part of kind of that evolving into, what is going to be your strength as you try to compete as a large business is really, where have you gotten traction? Where do you find that niche? What agencies or, customers are going to be good target opportunities. So really, kind of developing that plan, while you're still small, and again, far ahead of, graduation is really important to really narrow down and identify what those are going to look like. And so that really, starts to predict, some of the things that you'll have to prepare your business for. So, as you get into, full and open, obviously, certainly competing with, some of the, the largest, contractors in some cases, but it really does, bring implications in terms of, you may have additional business systems requirements, as you continue to grow, or as particular contracts have, clauses and requirements based on, what those statements of work are. as well as things like, cost accounting standards administration. You may have to, you may actually be getting into an award right off the bat that, could be, CAS covered. And so, just, as we've worked with many clients, there's, it happens quickly, and hopefully if things are going well for you, some of those, things that you might kind of put off in the distant future, could be what you need to be prepared for to win something, very short term. So, business systems, cost accounting standards, and then really understanding your, and really, kind of solidifying your estimating practices are really critical, because you're certainly going to have, more requirements with preparing and competing for those. And, you really need to, it's not information that you can pull together at the drop of a hat. And you really need to be, setting your business on that course for developing, competitive indirect rate structure. And really being prepared to meet some of those requirements. So those are definitely, some of the key things that can, fall right in line with, kind of getting to full and open, as well as, understanding how you can do those, with, you don't have the resources of some of the, larger or more established companies in government contracting. So how can you, meet the requirements and kind of plan to, continue that pattern of, growth and being ready to compete and more importantly, perform if you win those contracts.
Brendan, that just kind of reminds me of a call that you and I had earlier today with a client that they are a small business. They are bumping up on their size standards. They're not an 8A company, but they are planning for full and open. And so they are looking at an opportunity that should be out next spring in the first or second quarter of FY23. And but they're doing a lot of things really well. We're helping them with some training on all of the things that they need to think about, how they need to mature their business. They know that they need to approach the proposal very differently, and so they're not waiting. They're planning this, 6-9 months out, and I think that is truly the key to success for, that successful transition. And it evolves over time. And certainly, I'm sure many of our listeners have been thinking about this, from the day that they entered the 8A program. So it's not something to take lightly. In the last couple of minutes, Brendan, I wanted to ask you about the SBA recently came out with some new rules on past performance for small business that I thought might be relevant to this audience. So can you maybe just talk a little bit about it, just kind of high level? What does this mean?
Yeah, no, I mean, it's very timely given our conversation today. But as you said, the SBA has got 2 new rules, and I think that they are effective as of August 22. So, but essentially, they really do help companies leverage and kind of meet some of the past performance requirements. And so first, agencies are now required to consider past performance a small business obtained as a first tier subcontractor in a prime contract, in the case where where that contract had a small business subcontracting plan. And then the second the second standard is that when bidding, a small business, can actually use past performance of a joint venture, of which they were a member, obviously, provided that they did work on that joint venture's contract. So those are, 2 additional avenues to, leverage, situations where you've, perhaps been that subcontractor. And you can, kind of leverage, and that's particularly important because some of that past performance, assuming that that's a market or a customer or agency that you want to target, that's going to be really directly associated with what you might want to be competing in full and open on. And so again, the joint venture, the benefits of a joint venture, this is, really another facet that you can begin to leverage that as well. So certainly encourage folks to take a look at the latest on those because could be very beneficial to them in any bids that you're looking at trying to assemble your past performance basically as of today.
Yeah, great. So I think, the bottom line is we know there's no easy path. While you're in the 8A program, while you're looking to graduate, and once you do graduate. But I think the key is to plan ahead and be strategic and reach out for help and try to take every advantage that you possibly can. So with that, we will end for the day. We want to thank everyone for joining us. I want to thank John and Brendan for joining me, and just would encourage, if anyone has any questions, please feel free to email any of the three of us. You can find information on our website, cherrycbh.com, on past podcasts and other thought leadership that we put out. And please join us again for our next Cherry Bekaert GovCon podcast. Thanks.